Hey guys, it's Bill Lanier coming to you with part two in our series about the Midland real estate market and where we are and where we've been. Thanks for joining us. And if you were with us last week, you learned a little bit about where interest rates have been and where we are now and how it's affected our market. This week, we want to talk about average sales price and has Midland been a good place to invest your money? All right, with all that, let's begin with a short recap from last week on where interest rates have been historically. Switch screens with you. This is the 30-year mortgage rates each year since 1975. You can start out with the peak right here back in the 80s when we had inflation problems across the country. How did they combat that? With interest rates. We did have high interest rates back in those days. Next thing you'll see is this red line. It is the average interest rate from 1975 through this past year of 7.75%. And finally, at the end here, last year's interest rate of 5.34%. All of a sudden, 5.34 doesn't look bad compared to where we've been historically. But you back up to 2021 when we had below 3% mortgage rates. When it jumps up this fast, and currently we're between 6.5 and 7, what's it do to our buying public? Our next chart will show us. And how do we measure demand? Is through consumption, under contracts, homes under contract. And that's what this chart is showing us how many homes are under contract on average per month. And start out with the dotted line. It is an average of 2018 through 21, so it gives us a good trend line. And you'll see we start in January at our slow point. Typically, we'll peak in June for under contracts, and then we'll cycle out into our fall season here. And then this past year, the red line, you'll see the first quarter of last year. We were in record territory as far as consumption goes, right along with the rest of the country. Everybody was buying up real estate left and right. And then in March, the Fed came along and started raising interest rates, and higher interest rates did exactly what it was supposed to. It started slowing demand down, and especially that second half of last year, whenever the Fed kept expediting their interest rate hikes. You can see where we were 70 units off of the August norm, 54 units off the November norm. So this time frame, it was slower demand. Slower demand, what's that? An opportunity for buyers. Buyers had a little bit more bargaining power this past year, or second half of this past year. Sellers had to be a little bit more aggressive in pricing or offering concessions, which did show up. And then finally, this year, 2023, 3 months worth of data. Let's not count a whole bunch into this just yet. You'll see these gyrations, but we started out on a good note. We were right in there with the norm almost. All right, what we really want to talk about this week's average sales prices and where they've been since 2000. You can see if you bought a house back in 2000, around $98,000. This past year, we ended up at $367,000 for our average sales price. So not a bad deal for a homeowner. Once again, we only have 2 months worth of data for average sales price. So 2023, let's not watch this closely just yet. Let's get a little bit more data before we start making any conclusions on where we're headed this year. All right, so same time frame. What happened with it? The appreciation or depreciation a few years, and how does oil prices affect all this? The red line's oil prices, each bar is how much appreciation we had each year. Coming out of 2000, whenever oil prices started coming up, the shale play began, 2006, 7, somewhere in that neighborhood. You can see we had 20% appreciation in 2007 as oil prices were coming up. We had 2009, a lower year, and sure enough, we were impacted in the sales price. And then oil prices came back and we saw some good steady growth. 2015, another slow year, dramatic decrease in oil prices. And it showed up, this was our biggest decrease. 2020 was our other year. The exception to the rule is this past year, 2022, high oil prices. And I did not think that interest rate hikes would affect us here in Midland, but it did. It was really a good, healthy number. 3.3% appreciation this past year, which is a lot better than having a 20% jump and then big decline the following couple of years. So fast forward, let's go back to our average sales price and what's been going on for the last few years. You can start seeing those peaks and valleys in here a little bit more pronounced at this point. But what happens here? Let's throw a 6% appreciation line on this. That is good, healthy growth year over year and a good place to invest your money here in the Midland real estate market. All right, I hope you guys like this information. Next week, we're going to talk about what happens during the slow times if somebody gets on the fence and goes and gets a rent house versus buying a house and doesn't wait out the slow cycle. Kind of some interesting information. I think you'll enjoy it. Okay, from the Billionaire team at Keller Williams Realty, we like to pride ourselves on treating our client with integrity. We've got lots of experience. I've got 30 plus years of real estate experience here in the Midland market. Our team has a combination of 80 plus years in the Midland real estate market. And then also knowledge. We keep up with this data each month. We are the most in-depth knowledge realtors in Midland as far as what's going on with the real estate market. Okay, please give us a call with any of your real estate needs, 682-1144. We'll look forward to visiting with you next week.